How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data that was recorded on November 26, 2019. Here's a snapshot of the positions held as of that date. And so we begin by examining gold and looking at the positions that were held as of this candle right here on the weekly chart. Okay, so we saw that we had a big drop, okay, right here, and it's been consolidating since, and we know that it's tested the very top of this monthly area of demand. And so as it was consolidating here for the second week in a row, we see that they have dropped their long positions from 337 down to 325, okay? And we also see that they've increased their shorts from 51 to 53, but that doesn't tell us much because the previous week was also consolidating, and we see that they moved positions from 323 to 337. All right, so they moved positions higher from 323 to 337, and then they closed it. And you can see that in this candle, this previous candle, there was a slight move to the upside, which would explain the reason why they were adding to their longs. And if you look at the lower time frame charts, you'll see exactly why they were doing that. Okay, so right now we're not seeing anything really strong in terms of short positions being added, and nothing extremely strong in terms of longs being closed out, because previously they had longs at 323 and now it's at 325, so slightly higher. Nothing much more to be said there. Okay, we are reacting from monthly demand, so the move to the upside that we are seeing now was to be expected, but everything still stands. Nothing changes. Okay, they're still very aggressive with their longs, and they need to offload those. Likely going to continue offloading them, considering where on the chart price is. Now, is there a chance that price continues going higher? There's a chance. Is it likely that that takes place? Not likely at all. Okay, so we are still expecting price to continue lower, and we're watching to see if that is going to be what's going to take place. All right. Okay, so now let's take a look at oil. What do we see here? So oil was consolidating before the drop, and we see that they increased their longs from 541 to 553, but take a look here. This is the big one here. Take a look at short positions. 111, which was considered to be cooled off, all the way down to 82,000. So that's massive, massive profit taking on short positions. Okay, so reducing shorts to such an extent that it is very cooled off leads us to believe that potential more upside. Now, if you take a look at the Araujo report, we have clearly stated that we have found evidence that over the long term we're going to see a rally. So with that in mind, we would expect shorts not to be aggressive, and we'd expect them to start accumulating a long position again. So if you take a look at what the max position is and where we are at right now with their positions, you see that there is a lot of room for them to start adding again, even though 87% exposures to the long side. There is that possibility. I think it's going to take a little bit more time until that takes place, but we are watching for an accumulation of a long for a continued push to the upside. Now we have the US dollar. US dollar reacting from the monthly area of supply. It has since dropped. We see that it hit this area here, and if you take a look at positions, as price was dropping again from the tested area, we see that they closed off longs from 31,000 to 29,000. They also reduced their shorts. Bottom line, you look at their overall exposure here, and they're very cooled off. So they've really limited their exposure on the dollar here. So this big drop in longs and the bigger drop in shorts based on ratios increases long exposure from 82% to 85%. All right. So we still have the structure holding to the upside. We know what we're watching for. So far the data is not really telling us much. And if you look at the Araujo report, you'll see what the sentiment is on all these currency pairs, and you'll see that now's not the time to be really trying to engage this market, because the institutions are not really showing their hands right now. They're not really showing what their next move is. We know that they've been in a profit taking phase for quite some time, but where is price going to go from here? It really comes down to looking at the charts and deciphering what is likely going to take place. Okay, now we look at the Aussie, and what do we see? The Aussie is telling us that they have increased their shorts over the last few weeks. Take a look at here. 76, 82, 91, 97,000. Okay, adding short, but you can also see that during that time price was dropping. So that would make sense that as price is dropping, they're adding shorts. And they did that right at the test of this trend line. So everything is making sense. We've since seen a push up. So it could be profit taking on those short positions that they were adding when price was dropping. We'll have to wait for the data to come out for this week here, because we're dealing with this candle right here, which is still dropping. Next week's data can even show more shorts being increased. We're also looking at this here. Longs, we see a little bit aggressive, but you know, they've done that before, where it goes into a little bit of aggressive territory and then cooled off, a little bit aggressive and then cooled off again. So it's not really telling us much. So we have to wait on the sidelines and see what they're going to do. Next we have the US Swiss franc. US Swiss franc was rallying up towards the tested weekly area of supply. As that was happening, they increased their longs, which caused that move to the upside. 27,000 to 35,000, that's quite a significant rally. And if you take a look, this sell is more aggressive than all of these back here. Okay, so take note of that. They also increased shorts from 11 to 14,000, and that basically keeps long exposure at 71%. So again, stuck in a range. We can't really speculate on what's going to take place until one of those barricades have been taken down. Okay, next we have the Euro US dollar. And here's another one that's really not telling us much in terms of the positions. But I want you to look here. We're dealing with this candle here. You see that there's a wick to the upside, which means there was bullish pressure, and you can see that they added longs, and then it dropped, and you can see that shorts were also added as well. So the data is representing that candle, and it makes complete sense. The only thing is that we have an area down here where price is reacting from. But just like the Aussie, just like many of the other charts, there's a massive trend line there on the weekly chart that is going to be containing price. So until that area breaks, there's no reason to believe that price is going to go up like this. So we are watching that. We are watching the positions to see how they're going to manage. All right, pound. So the pound, we're dealing with this candle here, and we can see that the pound, they close off some longs and they increase some shorts, and then you see that bearish pressure with that candle right there. So again, look at the sentiment. Neutral. Very difficult to determine what's going to take place because of the neutrality of their position. So really difficult to know exactly where they're going to be pushing price, but we do know that we have supply here, we have demand here, and it's stuck in that range. So we're waiting for one of those to break to give us some sort of direction that they're going to take price in. Next we have the US dollar Japanese yen. Look at that increase in longs, and that took place right with this candle here, and you see the bullish pressure right after. Okay, also an increase in shorts. You see that there was some consolidation here, so that could explain that. Bottom line is price went up again, and what do we have again? The descending weekly trend line containing price. Look at the sentiment, it's neutral. Very difficult to determine what's taking place here on the charts. So we have to rely on market dynamics to lead us to some direction. And you take a look at the Kiwi, was consolidating here, creating a base before this area of demand was taken out. Neutral, or I should say cooled off on longs, and pretty much not doing much with shorts, still aggressive. Overall, they are bearish, and sentiment is bearish. We've come up, again, the weekly trend line is there. It's going to be likely containing price, just like this trend line over here. So again, very difficult to determine what's going to take place just by looking at the position. So we have to rely on what's taking place on the charts and the market dynamics. All right, so that's it for now. That's your CFTC report for November 26th. If you need any help, take a look at our website, www.whiteoakfx.com, and you can contact us through there. All right, thank you, and have yourself a great week.